Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A bullish white soldier yesterday, but oh dear, we have one of the drawbacks of my using continuation charts now. Gapping market. Oh well, I have had to deal with this sort of action for many years. Anyway, the market opened up under the lower trend line, currently at 69.51, the old February-based broken rising wedge pattern that had successfully showed the way higher back then. Prices dipped to the March 2020 high at 68.71.5 and actually rose all the way up to the upper trend line, currently at 70.18 of the same broken rising wedge pattern, before closing right on short medium moving average, currently 69.94. We now have a changeover gap left over between 70.17 and 71.14 in not the most useful of places. Now it depends on what we do with the upper trend line. That will determine whether this market wishes to fill the gap or not. So far today, a higher open and attempt up at the upper trend line of the old rising wedge pattern, but so far rebuffed. The base of the action is, unsurprisingly, the short medium moving average. German DAX futures. Okay, it is all getting a bit precious now. A gapping lower since filled in, bullish white soldier yesterday. The market gapped down to open at the very gently rising short medium moving average, currently at 15.397. Then dipped further down to the 38.2 projected Fibonacci line at 15.289. which is actually coincident with the congestion from the April-based diamond continuation pattern, before rising back up over both the short medium moving average as well as the broken October 2020 to date uptrend, currently at 15.531, to finish today just under the now overhead resistance of the combined broken lower bull channel line, currently at 15.630, the short moving average currently at 15.626, and the 50% projected Fibonacci line at 15.629. It's actually quite a lot to say in a very short amount of time. Quite a narrow combination right now. What I can say though is that this has just about achieved the downside target for the recent May to June rising wedge pattern and managed it all in one day, just about. Be interesting now to see if the move up manages to punch up and stay over this current overhead combined resistance, as it seems the downside has limited appeal right now, especially after all the indecision we've seen in recent days. So far today, a higher open in the midst of the recent overhead combined resistance and a dip down to just under the broken uptrend. I will have to see about getting that reassigned, by the way, before a move up again in the market towards that resistance area. It seems this week's renewed bullish incentive is still alive and kicking. US E-mini S&P futures. A really interesting action yesterday. A bullish long white Mariposa that opened from a much lower start below the projected 50% Fibonacci line at 41.81, the rising short medium moving average at 41.93, the 100% projected Fibonacci line at 42.02, and then proceeded to move back up all the way through all that support, which has now turned into resistance and which again has become support, to close higher than Friday. The actual open and low were in fairly free territory, but with some significant support below under 4100. But I have to say the recovery is a suitable riposte to Friday's bearish engulfing pattern and especially to last week's weekly key reversal down. You're going to go against something, that's the way to do it. Anyway, thus fulfilling the simultaneously dashing also both bulls and bears ideas of the market. So far today, a higher open, but looking like an indecisive doji cross right now, caught between 100% projected Fibonacci level below and a flatlining short moving average above. French CAC 40 futures. Much like some of the other stock index markets, this one both fulfilled and dashed bulls and bears ideas alike. After last Friday's huge counter to the counter key reversal down and bearish engulfing pattern combined, well, I suppose you couldn't expect a quiet market after that, and as I warned last week, we had a dangerous one yesterday. Prices opened up on the 61.8% Fibonacci line, projected Fibonacci line at 64.94, dipped down to the separate 50% projected Fibonacci line at 64.81. So there's two separate projections there, before rallying back up and finishing not only over Friday's close, but also back in between the lower time, currently 65.93, and the middle time, currently 67.25, of the recent late February to late March broken bullish shift pitchfork. Only this time the pitchfork was only breached, not broken again. This is a really fantastic performance by the market, managing to satisfy all and none at the same time. So far today, gapping higher open since filled in, as the market started within the pitchfork, what is seemingly testing the lower time once again, if from a higher perspective. Interesting to see which side of the lower time we close tonight. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.